Performances. For a startup project, the first two components of the remuneration of value consist in identifying the sources and volume of revenue. It is possible to achieve a turnover and yet be in a difficult position in terms of cash. This may happen when the incurred costs are too high, or when customers pay too long after these expenses are made by the company. In other words, capturing revenue is not enough for a company to perform well. Performance can be analyzed on two interrelated levels. The first level is a matter of accounting and financial approach. An investor wants to know at what point the business will become profitable. From his perspective, profitability is assessed first by studying how the company is operated, and secondly, which investments are required for its launch and its development. The profitability threshold for the operation of the company can be estimated in two complementary ways. First, in a time perspective, the break-even point is the date from which the difference between the company's revenue, also called the results, and its expenses, also called the costs, will generate a positive result, with the idea that this financial situation is durable. The profitability threshold is then expressed in terms of volume. This volume either corresponds to the turnover necessary to cover the company's costs, or to the quantities to be sold. This may involve the number of products the company has to be able to produce in the case of a manufacturing company, or the number of services that a service company will need to perform. Regarding the profitability of investments, the investor often works together with the entrepreneur and his advisor to design a business plan where the contributions, the capital, the partner's current accounts, and the loans cover at least the launch expenses. This arrangement takes the form of an initial funding plan. For certain projects, this plan is supplemented by an estimation of subsequent investments to develop the business. Fundraisings are organized to cover the needs inherent to the company's development stage. However, the company's activity can also generate resources to finance certain future needs. In other words, the company develops an ability to finance itself, in whole or partly. Since many failures are caused by a weak business plan, the entrepreneur knows that this plan is essentially for assessing the performance of a startup. The investor assesses the project's ability to generate profit for the repayment of borrowed funds, loans, the return on investment capital, capital inflows, and business development, or at least its durability. Other possible uses of the profits depend on the achievement of the three previous objectives. Generally speaking, all funding partners closely examine the performance linked to numerical estimates. Some of them may require further charts that an advisor will help build and understand. Financial performance is also important for nonprofit organizations, such as certain associations, foundations, or certain public services that need to assess their needs and closely manage their project in order not to be in deficit. Some of these organizations generate a turnover, while others receive revenue from various sources that require equally rigorous accounting and financial management, especially when they involve public money. The second level of performance is not financial. For example, it may concern image and reputation, job creation, customer or user satisfaction, products, services or range performance, security, respect of the environment, human resources management and social climate, expertise, the advantage of being a pioneer, location, management systems, networks, etc. This also means that each component of the business model can be assessed in a qualitative and/or quantitative manner, either alone or, more relevantly, in relation to other components. Obviously, the non-financial performance itself could become financial if the organization was subjected to a valuation, for example, in the case of a transfer. Non-financial performance is relevant to all organizations. However, it is particularly important for nonprofit entities depending on operating or investment subsidies. Financial and non-financial performances are closely linked. The latter helps the former, which itself is called upon to support the latter. To evaluate them, project leaders present the necessary tools to supervise the performance of their organization in order to prove that everything is being done to steer it towards the desired future. Such monitoring is performed before, during, and after the creation of the organization. Ex-ante control consists in estimating the achievable performance. Control during the process consists in setting up dashboards to ensure that the trajectory of the company is under control. Ex-post control is identifying the potential gaps between goals and investments and knowing how to account for them. In the event of gaps, corrective actions are implemented, for example, by providing the company with appropriate tools or reviewing the objectives. Entrepreneurs could then consider redesigning the business model.